We are a local firm that provides outsourced accounting services to nonprofit organizations and small businesses. And what that means is we will perform your bookkeeping and accounting or some portion of it, whatever a particular organization would like. So I've been doing this for about 30 years now, and so I have some experience. So we'll go through some slides. If you have questions, try to use the chat. That's really helpful. Three of us are watching it for questions or comments, and we'll try to personalize this to whatever degree we can based on the nonprofits that you're here representing. All right, so let's go ahead and move forward. Let's head into slide number 2, the board duties. All right, Stephanie, I'm seeing a desktop so far. All right, we'll wait patiently while we're waiting for the presentation to come back up. And there it is. All righty. So many of you know that there are a number of board duties that you are responsible for as you represent nonprofit boards. And the fourth one on this list is what we're talking about today, protecting assets and providing financial oversight as a duty that the group of you as a board have. Okay, next. What I would like to tell you about these slides, some of them, there's a lot of information on them, and we're going to highlight these areas today. But this is a really great tool for you to maintain a copy of, whether you print it out or maintain a copy on your computer. There's a lot of good information, good checklists, good summaries about the topics we're going to talk about. Okay. So this particular slide lists a number of different key financial internal controls that organizations might want to consider having. It's not that you have to do all of these, but the more that you do, the better you will reduce the risk that your organization has. So let's talk about these groups. The first one is spending limits. Some organizations will have 2 signers authorized for checks that are over a certain amount of money. And we recommend that if you do this, that threshold, that dollar threshold, needs to be considered based upon your organization's budget. What kind of expenditures are over and above what's normal and what's approved in the budget? And so that's how you tend to set that limit, so that when something is unusual, not only would most likely the executive director be signing the check, but a board officer usually is the second signer. The treasurer, the president are generally the 2 that are additionally authorized, but it can be a different officer as well. EFT, electronic funds transfers, and these ACH transactions that occur through the banks, you'd like them to be signed in advance, authorized in advance by the appropriate person. And this is a scary area. It is an area where there's fraud. There is not fraud, but there are scams. So it's not internal to you, but someone on the outside might send an email acting as if they were the executive director, and it will look as official as can be. They'll send it to say the financial person who handles your books, and it says, hi, this is the ED, please wire or, electronically transfer this amount of money to this vendor at this bank account. And the last thing you want to do is have someone use an email as the authorization to make this kind of a transaction, because those scams are out there. We actually just received one last week ourselves, where they were trying to act as if they were our vice president in our company, telling our bookkeeper to wire money. And, you always want these to be authorized in two ways. If somebody were to send an email, which is not what I recommend, but you would like to talk to that person if you're in the office face to face and say, is this what you asked me to do? Or pick the phone up and make sure you're talking, to that person and say, to the ED, is this what you just asked me to do? And, why is this, a normal vendor, et cetera. So that's a scary area. There's plenty of war stories that can be told about monies that have left company and nonprofit bank accounts, not to be brought back because you actually initiate it. You make the mistake, and it's not the bank's fault. It's your fault. So that's a careful area. Moving on down, separation of duties. It's always important to have different people. If someone is handling the recording of your checks, your deposits, and they are creating the outbound checks to vendors or using the bank bill pay function to use to pay vendors, there are certain jobs they shouldn't do as well. One of them is reconciling bank accounts. Proper documentation. If something looks unusual, it probably is, right?
Yo,
We
I
always
just
say
found one
use
of
your
those
gut.
too. Sick. All right.
We always say use your gut. Know what, if something's weird, look into it. Look into it. Having the treasurer on your board see a report of actual cash disbursements is really a nice thing to do. It keeps your financial person on their toes, and choosing a couple of those payments and saying, let me see the documentation for them is a good idea. We have a couple clients that do this. It's not onerous on the part of the staff who have to provide the info, and it lets people know someone is actually looking and paying attention to, is everything normal? Reconciling, as I said, bank accounts should never be reconciled by the person doing the receipt and disbursement function, and they need to be done monthly on time. It should be like one of the first things done after the month end, regardless of how busy somebody is. I don't care what they say, that needs to be done. Because if you're not looking at your bank account, you might not know there's some fraud happening in it. And so you always need to be timely about that. Physical protection of assets, storage of your checks and credit card information. Checks should be locked up if you're still using, paper checks. And credit card information should be secure, should be in the computer, in files that only certain people have access to. If you're keeping it on paper, which I don't know anybody who does anymore, again, lock it up. Those are the key things on that page, but there's a number of things there, and it's a nice checklist that you could talk with your executive director and financial person and see, are we meeting these or not? And if we're not, what kind of notes would you want to write? Are these things that you all think you should find a way to implement? Okay. Let's go to the next slide. All right. These are a number of things that, board members are going to see on a regular basis in their board meetings, or they should expect to see. Number one are budgets and forecasts. Budgets should be done annually. They should be approved before the beginning of the fiscal year. Do they have to be? No, but the best practice is you should walk into your fiscal year on day one with a board-approved budget. So you do that work, in the 3 to 4 months in front of fiscal year start. And then as the year goes on, if things are different enough, a forecast should be done, saying, well, instead of that budget now, because we got a new large grant, we'll have new personnel, new expenditures. Here's what it's going to look like through to the rest of the year. Those are not hard for the financial folks to do. Talking about cash and accrual, most of our nonprofit organizations use accrual accounting, which basically means that we record our revenues when they are earned, and we record our expenses when they have been received, goods received or services performed for us. And so cash, when you think about budgeting and forecasting, you want to take your accrual-based budget or forecast and then kind of convert to well, how does the cash flow come in as it relates to that? The reporting of restricted funds is quite important in a nonprofit. It should never be taken lightly when your donors restrict and specify how the monies are to be spent. The organization is responsible to follow those instructions. And the board ought to understand to some degree how much money is in restricted, what it's in general going to be used for. And, budgets should take this into account. The monthly or quarterly internal financial statements should also take this into account. Let me stop there for a second. We got a question in the chat. Do I think the step is necessary of a treasurer review if the organization is audited by a separate accounting firm every year? Great question. Absolutely. My answer is yes. The treasurer needs to review, because your auditors they are not looking at every transaction. They are sampling at a level that is appropriate for the type of internal controls you have in your organization. It's not their job to find fraud. Okay. If they find it, they will bring it up. It is not their job to find fraud. It is your job, right? Our jobs as nonprofit board members, nonprofit management, nonprofit employees to have all the procedures, policies, and practices in place that will deter any fraud, and hopefully not permit significant errors to go uncorrected, right? That's our jobs. They're there to simply audit it. And so that's my answer, Chris, to that question. Program income statements, certainly the executive director should be seeing the statement of activities by program admin and fundraising functions. The board may want to see that on some regular basis as well. It really does let you know how much it costs for each of your programs, and shared costs would be allocated across those functions, so you get a fuller, truer picture, and then you know what revenues you have that are specific by program and what revenues come in unrestricted to the organization that will also support all that work. We talked about bank reconciliations, and same thing for investment accounts. Need to be done monthly. No excuses, monthly and timely. Financial statements. Some organizations want internal financial statements monthly, maybe because they're larger, maybe they're more complex. A simpler organization, quarterly might suffice. Again, unless you're having financial difficulties, if your cash is really tight, you might want certain reporting about availability of cash and the ability to meet the expenditures in the next 4, 8, 12 weeks, right? Payroll and other responsibilities. So that timeliness is somewhat dependent on, are you smooth sailing, or are you in some trouble and need a closer look. Analysis, I think, is an important thing. Besides seeing numbers, you want to understand, well, what is it that's significant about them? Are there certain ratios, financial ratios to be provided to the board? And it's not like you need 20. You might need 3 to 5. Trend analysis is helpful, and benchmarking with other organizations is helpful. And you might ask for benchmarking. Well, how can I benchmark? We'll talk towards the end of the hour about GuideStar, and GuideStar has the Form 990 tax returns for nonprofits online that we all can access. And those are a wealth of knowledge for benchmarking against other organizations that you want to benchmark yourselves with because they're doing the same service or in your same geographic area, etc. Talking about board structure, you do, when possible, you do want your board treasurer to have some financial expertise. It's nice when that person is an accountant or maybe a banker. If they have any nonprofit experience at all, it goes a long way. And in addition to that, you want the folks on your finance committee to not be cookie cutter, same, everybody the same, but if say your treasurer happens to be an accountant, great. Well, then it's nice to have a banker. It's nice to have a business owner on your finance committee, etc. Other people, as well. Certainly the folks on your board who have expertise more in your programmatic area are probably going to be on other committees, not the finance committee, but legal folks, HR folks, etc. Always helpful, always helpful. And then larger organizations will have an audit committee that's separate from the finance committee. Small organizations won't. They'll have a finance committee and all the audit committee responsibilities fall within it. But if you're larger, it is nice to have a separate audit committee, and they're the ones who will have a closer contact with the audit firm before and after the audit. And they'll take a closer look at the notes, certain notes. We have to remember that the audited financial statements are not the property of the audit firm. They are the property of and the responsibility of the nonprofit organization. Okay. They happen to put it together for you, but note 1 in that audit explains what you do, your mission, your programs. Certainly the auditors can write it from your website, etc. But you want to have some input in that. You want it to be as good a note as possible, explaining, who you are and what you do, who you serve. Okay. Any questions here? I don't see anything in the chat. If not, we'll keep moving. Okay. This it's a sector or a segment, an industry, so they should have that experience. Be sure they're going to meet your deadlines for when you want the audit done and finalized, as well as the 990. You're going to ask about their fees. Often they will give a 3-year bid and sort of smooth their costs out over a 3-year period. And that's good. You can't have a different auditor every year. It's just too costly on everybody's part, time and money-wise. Most firms will keep an audit. Most nonprofits will keep an audit firm at least 5 years, and many, many longer. You can continue to use the same audit firm. Often it's useful to have the audit partner switch out within the firm so you get a fresh set of eyes. It's nice to do that. And the actual engagement letter is supposed to be signed by a board member. Again, usually the treasurer or finance committee chair or both. And it's not the executive director isn't involved. They certainly are. But the auditors work for you, the board. And so that's why having a board officer sign that engagement letter helps to clarify that role. And certainly what you want to know after the audit, the audit partner will always meet with the finance committee if you have one, and hopefully the board as well. With the finance committee, you want to talk about things like, were there any adjustments you had to make to our records, and why? And, is our current staff competent to have provided us reasonably accurate statements throughout the year, because you all are making big decisions throughout the year using the financials you get. So if the auditors come in at the end of the year and have to change a lot of things, that's a problem. That's a red flag. You've got the wrong people doing your financial work. And you'd want to improve that competency of that staff. Okay. And they will talk about internal controls as well. If they see that you don't have sufficient internal controls, they'll let you know if they think there's things that you can improve. Okay, let's go to the audit checklist next. And this document is one of those things that we're not going to go through it because it's very long, but it's one of those documents, what I said at the beginning, is a really useful checklist for you to understand. And we'll highlight these things here. So under the federal requirements, there's a list of things that you would do to make sure you are in compliance with the IRS requirements for a nonprofit to keep its exempt status. Okay. And there's a number of things here. You have to file your 990 by the 15th day of the fifth month, or file for an extension. You have to have your organization has to have done the 1099 reported. It needs to comply with the Patriot Act and payroll tax withholdings, and you should have written policies for code of ethics, conflict of interest, and whistleblower protection, and a number of other things here. So again, this is a checklist that you could go through with your executive director and the financial person and say, do we do these? Do we have these? How do we know we comply? And if you come up with an area that needs work, there you go. You can work on it. They can work on it. So not only do we have federal requirements, but we have PA requirements, Pennsylvania requirements for those nonprofits who are in Pennsylvania. Primarily, it's with the Bureau of Charitable Organizations. And we have until the 11th month after the fiscal year end to file the annual report that goes into them, called the BCO 10. We have to make sure that the folks who are doing the thanking, if you will, for donations, they have to put the appropriate verbiage on the letters, emails, etc., that go out to the donors, and making sure that the appropriate disclosures are on your solicitations as well. So these are some cut and dry things. I would say that I'd be surprised if any of your nonprofits aren't doing it, but again, it's not a bad idea to go through the list. We'll go to the next page of the audit checklist. And these are questions about operations. What accounting practices are you following? Are you using accrual basis, which is the preferred and considered in compliance with the United States generally accepted accounting principles? Do you have a budget? Do you have adequate insurance? Do you have safeguards for the credit card information? You know, that's a whole separate area with this PCI DSS compliance that most likely your executive directors are having to sign something with the provider saying, yes, we use encryption, we limit access. And most of your organizations today use third-party providers like Stripe or PayPal to receive donations electronically, usually via your website, because these are the most secure ways to do it. Questions about income and expenditures, and then a whole list of questions about auditors in terms of, who's doing what. It is important that you, the board, receive your audit, preferably that your audit partner comes and explains it and you can ask questions. Also, that you are given a chance to at least read the Form 990. Again, preferably explained to you in a meeting, because it's got a lot in it and your audit partner can really hone in on the key points. And if you are unfortunate enough to have what people call a management letter, you're going to want to look at that carefully. It's where they would be telling you there were deficiencies. And those are things you're going to want to work on with your executive director to remedy. All right, let's go to the next one. Next page, operations, more details about just, day-to-day things, record keeping, more about the budget. And then these policies. Okay, I think the policies are something we could just spend a minute on. You want a written investment policy. Even if you're small, even if you don't have a lot of investments, it's really good to have clarity about how you are willing to invest. Do you have a really low tolerance for risk, and therefore you want everything in FDIC approved investments? Or are you willing to put some funds? These are excess funds that aren't needed day to day in operations. Do you want to put them in an investment account, say at a Vanguard or a Fidelity type of organization? When you're much larger, often organizations will have investment management firms they use to help steer and direct where monies are being invested. But it's your job to describe your risk tolerance of high, medium to low, your targets of how much would you like to have in equity, stock type of funds versus fixed income, like bond funds. So these are the kind of things that would be in an investment policy. And this is one of the policies I don't always see organizations having if they're smaller. And I would recommend, if you don't have one, you think about working on one. Certainly your accounting department should have procedures on how they do their work, specific policies that are followed. Example is your fixed asset capitalization policy, which is when you buy, say, a piece of equipment, you specify a dollar range. If it's at least a certain amount of money, let's say $5,000, and its life will last longer than a year, then it's something you would capitalize and put on the balance sheet or statement of financial position as a fixed asset, because it's going to be used over multiple years. It's not just an expense that just gets used up now. That's an example. Again, a document retention policy, so you're not keeping files unnecessarily longer than you have to. And certainly electronic files today make that so much easier. But I've been places where there have been boxes and boxes and storerooms of paper that were eons old, and I had to help, comb through them and and put together a document retention policy so you know which things you can dispose of properly by shredding or bringing a shredder company in, or what are the things that are permanent and need to be kept. And these kind of policies, there's lots of templates out there today, so you don't have to start from scratch. The last item on this page, I think, is important. Trying to have a reserve, this I call an operating reserve of cash of at least 3 months, equivalent to at least 3 months of your operating expenses. Some organizations have more. We have clients who have 6 to 12 months in reserve so that when something happens, they're able to have these funds to continue to operate, continue to make payroll while they work on resolving the problem. A good example that we've all gone through recently, is in 2025 when certain federal grants were being taken back or delayed. That was difficult for a number of nonprofits. Another good example is our Pennsylvania state budget, which unfortunately, more often than not, we go into the new fiscal year of the state in July without an approved budget, and our nonprofits are performing very critical and essential program work with constituents, and all of a sudden they're not getting paid by the state for these grants. They're not in an approved, situation as they enter into the new fiscal year. And we can't just stop our services. People just don't stop having need, and it's really hard. Some of them have some operating reserve they can work with for a couple months. Some have a line of credit. But this has been a really tough year, the one we're in now. It wasn't until I think December that the state budget was approved. That's a lot of months to expect a nonprofit to be able to continue services without being paid. And it all gets caught up, but it doesn't mean you have the ability during those months to spend those monies. Let me stop and answer a question here that I see in the chat. If you still have paper files, what's your recommendation for keeping on file before shredding? Angela, I can't give you an exact answer. It depends. There's a document retention policy will specify various kinds of records and how long you need to keep them, or whether they're of the permanent nature. And so generally speaking, with the IRS, if it's the type of document that can be discarded, it's usually after 7 years. Okay, that's a general statement, but that can't be your document retention policy. It's got to be more discreet, more complex than that. But again, there are lots of templates out there that you can use as a starting point. And often nonprofit organizations will create a template, and then they'll have their attorney take a look at it. Not that they need to spend a lot of time, but it helps if your attorney looks at it and says, yep, you got it right, or no, tweak it this way. Okay. All right, let's move on to fixed assets. Your organization should know exactly what you have. Usually fixed assets, with your small to medium nonprofits, you're going to use, your financial people are probably using an Excel spreadsheet to keep all the details of each one of those, but the summarized information's in your accounting system. It's pretty tough if you're going to have an account for every single fixed asset you own in your system. That's pretty tough. If you have a lot of fixed assets, then it's best to you can buy a software system for keeping that information in all the detail that needs to be done. But you have to take a look at it at least once a year to say, did we dispose of something and we forgot to tell the accountant, who's keeping the books? And now it's time for them to finish the year, and whoops, we don't have that, van anymore that we used to transport our our clients with, and we need to let them know. I mean, usually they'll figure it out because maybe a check will come in the door because you sold the van, let's say, and they go, what happened? Nobody told me. And then they'll be, find the information. Or in some cases, they're kept fully in knowledgeable, along the way. But I've seen my share of detailed records that say you still have, a nonprofit still has a number of, computers, furniture, vehicles, and they don't anymore. So that needs to be kept up. As far as employees and personnel, this is a very important area with very serious legal consequences, if you're not clear. So certainly some employees may have contracts, but more than that, I think many would have like an employment letter, something more like a letter than a contract. You want to have job descriptions. You definitely need up-to-date employee manuals, policies, procedures. That is an area that I don't think anyone should ever be practicing outside of their policies. They certainly can change them, but there's a way to go about that, right? And some of those things need to be board approved. Good personnel files with all the appropriate documents is important. And again, lastly, strengthening your organization. You want board training, staff training, and any organizations that handle cash on a regular basis, have petty cash accounts, or debt like mortgages. There's more audit checks, more review that you'd want to have, because certainly dealing with cash is an area where funds can be diverted more easily. So you need, some extra eyes on that. And debt, to me, it's more about just making sure you're recording it correctly within the accounting system. The debt's getting paid correctly, and you're recording principal payment, down appropriately and interest appropriately. So just a little more complex. Okay, in the chat, Chris says, oh, how nice. She says she's happy to share their document retention policy, Angela. It's about 3 pages long, not too bad. And you can send her an email at christinez@cvcofcc.org. That's in the chat if you want to look at that, Angela, or anyone else. Thank you, Chris. Yeah, I always find that our nonprofit organizations are so collegial and so sharing. And that's the best way, to take a look at what someone else has. Make sure you adopt it to your needs, though. Don't say, oh, that's a perfect thing. Can read it carefully, make sure it fits you. And again, I would still have an attorney look at it, just to be sure. All right, moving on. Let's talk about our Form 990. That's quite the document that we all see once a year. It's the annual tax return for your nonprofit. The board's responsibility is final responsibility for it. It's not the ED who has responsibility for it. It is you, the board. And that's important to know, because many of us on boards are not experts in nonprofit taxes. So we are relying on, first of all, the audit firm that completes the tax return. They are experts, of course, and that's why you pick an audit firm that works with nonprofits regularly. And you will have expected your executive director to provide all the correct answers to the many questions that the auditors ask, and then to have read it and make sure those answers were communicated, and interpreted correctly. So when the audit firm does the 990, they bring back a draft of the report, and the executive director reads it carefully. Usually the financial person does too. Often the treasurer on the board's going to want to read it more thoroughly than other board members. Because the rest of the board, you all are going to read the highlights. You're not going to read every page of that return. But you want to know that you have the right people in place that you can rely on to have read it page by page. The kind of information in there, it's so thorough. There's financial information, programmatic information, governance, management. There's a lot. The main form is about 12 pages long, and there's a lot of information in there. Let's see, Shane is asking a question. When do you need to have an audit? We're under 100,000 of non-governmental contracts, about 300K in governmental. My understanding is we don't need the auditor review till we're over 100 non-governmental funds. Is that correct? Does it make sense to get one every year? Regardless. Okay. There's a couple considerations, Shane. First one is you have to understand the Pennsylvania Bureau of Charitable Organizations thresholds. They have thresholds because you need to report to them to be able to legally solicit funds from donors in the state of Pennsylvania. And so if you were to Google Pennsylvania Bureau of Charitable Organizations, you will find a chart on their website which tells you at the various levels, and I don't have it off the top of my head, and I don't have it printed out with me here at the moment. At a certain level, your internal financial statements suffice for them. You get above, move up and you have the next level, they'll say, well, you need an audit firm to review or compile your statements for you. Above that, they'll say you need an audit. Okay, so there's levels. So you need to first think about that and comply with them. Besides that, you ask yourselves, ask the board, do you believe it's appropriate, even if we are smaller, not real small, but smaller, that we get an audit? And it could be you want an audit, even if you don't have to meet it for the state requirements, but you might want the audit because the kind of foundations that you're going to for grants may want you to have an audit so they have more confidence in the accuracy of your financial information. Okay. So you need to be thinking about that, talking about that with whether it's an internal or external party who's helping you do fundraising. And then your governmental grants, you have to read those specific grants really carefully. It depends if they're federal money, state money, county money. And just because your grant comes from the county, it could have state and or federal monies flowing down through it. Okay. But in those grant documents, and I'll say particularly Chester County, because I'm familiar with them, they'll often have a requirement for an audit. And in particular, it's called a yellow book audit. It asks for some extra work, some extra examination of internal control of an organization. So those are the things you really need to look at. So it's not just one kind of cookie cutter answer. All right, back to our 990. You can change your 990 in terms of certain answers. There's certain, like they'll ask you to describe your programs. And those that do it best will say a description of a program and how many clientele, constituents you serve, what are your outcomes, etc. So you can really give good information to the reader. And you have to think of the reader of the 990 as just not the IRS, but your donors, particularly your foundations, right? Or your major donors. They're sophisticated and they read these things. And the more you put in there for them to understand who you are, the better. Your 990 is certainly held by the IRS, by you. People can ask you for it. And it is on GuideStar, which we'll talk about in a few minutes. where all of us can see it. And so, yeah, the board uses it, the donors use it, the IRS use it, and your Pennsylvania Bureau of Charitable Organizations all use your 990. Okay, so let's chat a minute about GuideStar. They get your 990 directly from the IRS. They don't, there's one schedule called Schedule B, which has key information, private information about your significant donors. And the GuideStar blocks that out appropriately, as should you if someone were to ask you for your 990. If they ask the executive director for the 990 for your organization, you don't want to give them Schedule B. And what we ask our audit firms to do is once the 990 is finalized, we'll say, and please give us a second version, which is called the public disclosure version. And if you were going to put your 990 on the nonprofit website, that's the version you put on that. If someone were to ask personally for one, you would give them that. When it's going out to your foundations or donors, if asked, you use the public disclosure, because that Schedule B has names and addresses and amounts of money for key donors. And that's not appropriate to have floating around. Okay. It's important you understand that your nonprofit organization can and should be updating its GuideStar information online. Because there's a lot of information there that only you can provide. It could be as little as just your 990s because they get them from the IRS, but you want more out there. You want to be as competitive as possible in when someone should use GuideStar to say, who should I donate my money to? You want to be as transparent as possible and give as much information as you can on GuideStar. So someone in your nonprofit organization should be responsible for that, whether it's the executive director or the fundraising person under their, ED's direction, etc. All right, let's move on and just see what the main sections of the 990 are. We're not going to go over these in detail, but program service accomplishments. This is where you have input. You want it to make your organization shine, okay? That's really important. It does also have information on key management's compensation. That's usually provided as part of the regular information the financial person gives to the audit firm to put onto the 990. Your executive director has answered questions about governance and what your policies are. And then there are various disclosure schedules that are completed. Schedule A describes how you are tax exempt, because there's a number of ways. And then it computes your public support. And that's something that board members should understand. Again, there's a few key areas, and this is one of them. You want to see what the public support is and that you are exceeding the necessary threshold. And it's a mathematical calculation that's done by the audit firm. But if you were in danger of going below the threshold, you'd want to deal with it long before you fall below it. And so that's something to see and understand. Schedule B is that contributors schedule that I mentioned. Schedule D provides more financial information and reconciles between the actual audited financials and the 990. There are a few things that are different. Generally speaking, it has to do with how, for the audited financial statements and your internal statements, we have to record unrealized investment gains and losses and investment expenses. They're handled differently for the tax return, and this is where they get reconciled. And also donated services are handled differently. So lots of other, of course, financial information is is on this tax return. And then looking at the next page, this is one of those documents that, let's see, it's 2 pages of this primer. And to me, I would hold on to this. And just before your board meeting where you're going to review the 990, I think this is a good thing to read and refresh your memory about the different parts of the 990 so that when it's being presented in the board meeting, you'll be able to ask more intelligent questions, and understand what they're talking about better. This 990 was last revised in a big way in 2007 for the 2008 tax year. And I know that I particularly personally appreciated all the changes. It tried to make it more of a document for readers, not for the IRS as much, but for the readers who want to know about your nonprofit. And so it gave this summary information on the very first page, which was a breath of fresh air, and then the various sections. So I can say that as an accountant, I appreciated the changes that came about then. And nothing substantial has changed that I'm aware of since then. But again, this is a great primer for you to use. And I think the other one key thing I want to mention here is that so nonprofits can have unrelated business income, right? This is when you're doing something that isn't in fulfillment of mission, and it has to be looked at differently by the folks doing your tax return to see whether you earned really a profit. And if there was a profit greater than $1,000, there's some taxation of it. The kind of things that might be common in this area would be, let's say if you're a museum and you have a gift shop, okay? Or if you own your facility and you rent some of the facility space out to others, for parties or such, right? Or other purposes. And the third area that's common is some like membership organizations that have journals, magazines, will sell ads to put in those magazines or in newsletters. Well, that's not in fulfillment of mission, and that has to be evaluated differently. So that's just something to understand, because if your nonprofit has such a kind of a business-oriented section, it's going to have to look into and consider whether the 990T, T for taxable, has to be filed. Okay, so you might have to deal with that. All right, moving along. We're closing in here on the end of our session. More of this primer helping you understand the actual statements that are in the 990. Very important. One of the areas most of us don't do too much with, but Schedule C here on this page talks about political campaigns and lobbying activities. Okay, we're allowed to advocate within our mission, but we're not allowed to be lobbying. Okay, and that's an area you want to make sure your nonprofit understands well enough to know the difference between advocating for issues, okay, versus lobbying, in Washington. So, all right, moving to GuideStar. We have a couple of pages here that, in case you aren't familiar with GuideStar, it has these seals of transparency, bronze, silver, gold, platinum being the highest, So the more information your nonprofit organization puts on GuideStar, the higher its seal of transparency. And so you certainly want to strive for that platinum. And, there are a lot of organizations using this information, right? So donors, where do they see this information? Well, donors are seeing information on Facebook, Just Give, Network for Good, Volunteer Match, Salesforce, the major donor advised funds in the US, like Vanguard and Fidelity. They have big charity-based donor advised funds. And there's many private foundations and community foundations. Everybody's using this information. So as a board member, I would want to know, what's my organization doing? How do we look on GuideStar? So if you can, when you have some time, take a look at your organization on GuideStar, and then you're able to talk with your fellow board members and your ED about it. The next page, the next 2 pages will show you some examples of the kind of information, or it's actually 3 pages, of what's out there on GuideStar, and how you can reach millions of funders. And this first page is a little more of maybe an advertisement for GuideStar. GuideStar is now owned by Candid, but they're saying, claim your profile, your nonprofit profile, get approved, tell your story. It's important to do it. And then on the next slide, you'll see, they do a good job there of providing high-level financial information. They'll show charts, they'll show some of the metrics. This is a great place to look at metrics and say, if this is getting reported on GuideStar, should we be looking at this in our, quarterly financial statement report package? Should we know our liquidity? Of course, you should know your liquidity. How many, basically, how many months of cash do you have? Months of operating expenses do you have in cash? What's our fringe benefit rate for our employees? Are we competitive? Who are our funding sources in terms of the kinds of, how do we get our revenue, programmatic or contributions, et cetera. And then finally, this last page shows how you can easily compare with your peers. And this example is senior centers in Chester County. And it just shows you that you can see this information on GuideStar and be able to do some analysis as it relates to financial information here with your peers. All right, so that is the end of our official session. Does anyone have any additional questions? We have a minute or two. We can stay on the line, but it's closing in on 1 o'clock. We've answered any of the questions that are in the chat. Donna, do you have a question?
I have a question. Can you hear me?
Speak
Can
up
you
for
hear?
me.
Okay. I am Bonnie and I have a question. How is it possible to get a copy of your checklist for auditing for the audits?
Yes, Stephanie put that at the beginning of the chat. If
Oh,
you
that
were
was her
to,
audit checklist?
yeah,
I thought she had something about policy. I'm sorry.
that's the handout to the presentation is the first thing in the chat, which has all those checklists that we just looked at.
Okay.
And then it was, who was it here? Chris Zaccarelli said she was willing to share a document retention policy.
Yeah.
Okay.
Right.
But yeah, that audit checklist is part of the presentation. You'll see
Mhm.
it there.
Okay, thank you.
You're welcome. All
We'll
right. Any
also
other?
make sure a copy is emailed out to everybody after the session.
Oh, thank you
Thanks,
so
Steph.
much. I really appreciate that.
Yeah. Okay. Anything else for the good of the group before we finish up and say goodbye?
You covered a lot. Very
I
good, thank you.
Can I ask one quick question? I'm associated with a couple different groups, and one of I'm on the board of one nonprofit organization that was set up as a private foundation, and we're trying to go become a public charity, and we're in the 5-year look back period. Any hints? How can we, is it like I think we have one more year left until the 5-year look back period is complete. And so far, so good. Can we change our 990 now to say that we are a public charity? Can we hold ourselves out as a public charity at this point?
I believe not, but let me start by saying I am not a tax expert. Okay. I'm an
Okay,
accountant, but with an accounting expertise,
specialty.
not a tax expertise.
Okay,
But I don't believe you can say anything until you've gotten proper approval from the IRS, written, approval from then you're going to be able to do that. And you're going to want to keep your eye on that Pennsylvania Bureau of Charitable Organization requirements as well. Okay, but you're going to need to ask your tax accountant and or tax lawyer about that.
okay. Thank you.
You're welcome.
And at this point, I guess we say goodbye, or is there another?
I have one other question. Did you set it up so that this meeting was recorded?
Yes.
Okay, so I'm because I was concerned whether or not my computer was doing that or yours. Okay, thank you.
Yes.
I
No, the
appreciate it.
Chester County Community Foundation has done the recording for us.
Great. Thank you very
All right.
much. Must
Well,
leave.
why don't we call it a day? And thank you all for joining in. We certainly do appreciate, we know you're taking personal time, and we know that you have been volunteering at these nonprofits with your own time. So thank you. And bye.